Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Caliber Home Loans. At Caliber Wholesale, our products make us different, and our people make us great. Caliber Home Loans Incorporated is an industry product leader with a full offering of core conventional and government products, coupled with our innovative non-agency portfolio lending products. Contact us to learn more.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network and brought to you by our good friends at Caliber Home Loans. It's quite a news week ahead, so technical indicators will really have a strong bearing on the direction of rates, and there's a lot to talk about there. But we'll also get the Fed minutes on Wednesday, and this is important because it gives us a look back at the last Fed meeting and perhaps gives us some insights as to whether or not the Fed is more inclined to hike in December. Now, possibly they could hike in November. I don't think that will happen. I do believe that a December rate hike is very, very likely. And as we've discussed in the past, if that happens, probably benefit the long end of the curve, benefit mortgage rates. But last week, what was interesting was we did get the jobs report, and that came in a little lighter than expectations. It's the most important report of the month, and it's one that the Fed closely watches. And we were expecting to see 170,000 new jobs created. We only got 156. Not that bad, but the unemployment rate actually moved up from 4.9 to 5%. Now, there's two reports. You probably know this, but there's an establishment survey, and then there's the household survey. So the establishment survey showed 156,000 jobs, but that 4.9% to 5% jump in unemployment, that comes from the household data. And that household data, when you look at the number of jobs created there, the difference is household data actually has phone calls made to households, about 60,000 of them, and the establishment survey uses a lot of modeling. Well, in the household data, we saw jobs increase by 354,000. So why in the world did the unemployment rate move higher? It did because there was actually more people coming into the workforce, about 440,000 of them, than there were hiring. So the unemployment rate actually moved up a little bit, but now instead of 4.9, it's got a 5% handle. And it caused some consternation in the bond market. Is the bond market trading because of a little bit lower job creations, or is the bond market trading because a little bit higher unemployment rate? And it vacillated really near an important level at the 200-day moving average for the 10-year and on mortgage bond prices near some technical support floors as well. I want you to watch a level this week very closely, and that is 1.753. Yes, or you could even say 1.76 on the 10-year Treasury. If we stay above that 1.756 level on the 10-year Treasury and we remain there for at least a full day, chances are that yields will move pretty rapidly towards 1.9% or 2%. That could be a big change for us as far as pricing goes on our rate sheet to the downside, and it could also mean that yields, of course, will correspondingly on mortgages move up 1/8 to 1/4%. So we've got to be very careful here. Will this ceiling hold on that 10-year Treasury, or will it give way? I guess a lot's going to depend on watching some of the reports that come around from around the globe. We're seeing global yields rise, and the British pound has been really getting taken to the woodshed here. We've seen the British pound decline rather rapidly. Now, that's kind of a good thing if you're in Great Britain because your exports are going to be cheaper. So why does this impact us here? We know the globe is connected, but let's take a deeper look. The British pound, by declining, means that in Great Britain, they're actually going to be importing some inflation because now it'll cost more to import goods, and they do a lot of that. And inflation is something that kind of tends to have an interesting impact because if there's inflation in Great Britain, their bond market's going to respond by higher yields. On a competitive basis, their yields start to look more attractive to other areas in Europe, in Japan, and the United States. So to keep pace, yields here oftentimes have to rise. So it's an interesting dynamic that we'll have to watch carefully. For now, we're going to advise you to watch that level on the 10-year. If interest rates, and by the way, we did advise locking ahead of that jobs report, you should keep track of that with MBS Highway. Go ahead and sign up with us. But otherwise, watch that 1.76 on the 10-year. If you see yields above that, be really cautious and make sure that you advise your clients because they've been quite complacent of late. All right, hope you guys have a great week ahead, And again, sign up for MBS Highway. I think you really enjoy it. Bye-bye.
Your reputation with your referring business partners depends largely on the lenders you recommend. This is why you'll want to choose a partner who shares your commitment to customer service. At Caliber Home Loans, our products make us different and our people make us great. A leading product innovator. In addition to our core conventional, government, and jumbo loans, we've created our own non-agency portfolio lending products. These enable you to assist creditworthy clients who can demonstrate the ability to repay. To learn more, visit us online at caliberwholesale.com.
This is Mortgage News Network.